It just seems like the problems for Apple just keep mounting up. The company obviously is dealing with the tariffs, manufacturing in China, the fact that the Chinese are buying domestic smartphones more and more these days. The company also getting backslapped in the court of law as it relates to the App Store, dealing a massive blow to a big profit center for the company. Also, Google on trial as well, potentially putting those massive multi-billion-dollar search engine deals with Apple in jeopardy. Also, due to the tariffs and Donald Trump, the company is likely to add a $900 million in cost in the upcoming Q3. Everything leading to this company in the after hours, after reporting earnings, down by about 4%. Is this creating an opportunity to buy Apple, and where are those levels? We'll discuss that and more on today's video. Many of you wondering, where are my earnings videos? Colin, why are you not talking about SoFi and Intel and ASML and Taiwan Semi? That is because we've got a lot of subscribers over at Equity Empire. They're getting the latest videos. In fact, there's a new chat feature where you can ask me questions and talk to me directly, and those are very exciting. Thank you for everyone that has already subscribed. Now, Apple year to date, I tell you what, not like a lot of stocks, absolutely getting backslapped, down 15%. You stretch this out to a year though, things are looking pretty good. Now, Warren Buffett, Berkshire Hathaway reports their earnings, I believe on Saturday. And boy, he got out at the top. Is that signaling a top for Apple, or can you step in and buy this one? We'll look at it fundamentally because the Q2 numbers just came in. Revenue came in at $95.5 billion. That was 6% growth year over year. Wall Street was expecting a number right around that range, although you had some high-end estimates close to $98 billion. When you look at the upcoming quarter, obviously expectations fall down a little bit as you get closer and closer to that next iPhone release. In fact, the Q3 is the weakest from a revenue standpoint, coming in at $90 billion. That's why this kind of $900 million charge actually hits the company a little bit harder in a quarter where they have less revenue. Now, also coming up a little short is the buyback. It's so ironic, and it's a tad bit hard to say with a straight face that $100 billion buyback is actually coming up short for the company, but it actually is smaller than the previous buyback that they announced, and they tend at Apple to maintain these things, if not increase them. And so the fact that they dialed back on the buyback has some investors a little concerned. They did raise the dividend though by about 4%. You're getting a tiny yield on this one, but you'd have to assume if you're going to hold this one over the next 10, 15, 20 years, the company will likely move its manufacturing out of China into other countries, maybe even partly here in the United States, and be able to continue to not only buy back the shares, but also pay the dividend. Now, the company got a bad ruling in court as it relates to Apple that is going to allow more App Store purchases outside of the Apple ecosystem, which means Apple can't take that Apple tax, which is high as 30% on a lot of transactions. You're going to see numerous app makers, particularly on the game side, direct you outside of the game or whatever application you're in to complete that purchase on a website. I have already seen this in numerous cases, including Meta, which is if you're going to buy Instagram ads on Instagram, they actually direct you to the site saying that you'll actually save about 30% if you did that. Many other applications are going to do that, which will put some pressure on those services revenue, which we'll show you here in just a moment. In fact, those come underneath the expectations from Wall Street, although still growing at a healthy clip. There's also the fact that Google is also tied up into a court case which could threaten the default search engine deal, which is worth tens of billions of dollars to Apple, which flows right down to the bottom line. That coming under pressure. The company's future revenue growth is pegged at kind of that mid-single digit 4-5%. I don't think that really comes under pressure. It's really that profitability, because you have the impacts of the tariff where the company is either going to have to raise prices, which could impact sales, or they're going to have to eat some of those costs, which obviously impacts profitability. Total net sales coming in at $95.4 billion. That was growth year over year. Gross margins, all these types of things, about what you'd expect with Apple. Year over year on the operating expense side, about $8 billion up to $8.6 billion on R&D, which should not go without mentioning. The company has had a flop with the Vision Pro. The company gave up on its electric vehicle. The company just has simply not delivered a new product in a while. Will they be able to do that? And when they'll be able to do that still remains a mystery for most investors and the company. On the selling general administrative side, 6.5 up to 6.7. Total operating expenses at 15.3, up $1 billion compared to last year. Operating income coming in right at $29.6 billion. They got a lot of problems over at Apple, but $29.6 billion of operating profit in a quarter sure as hell ain't one. Now, they do have a China problem. You see year over year, at least on the revenue side, that is actually down. And in the Chinese market, you have subsidies from the government. If you buy a cell phone, guess what? In China, might make you, if you're in one of these other countries, you might want to get on a plane and go declare citizenship in China, because they're giving multi-$100 subsidies if you're buying devices there. And they do apply to the Apple devices, but it has not impacted the company from a positive way. In fact, many believe that these revenues will fall off a cliff if and when those subsidies in China start to expire. So the company is benefiting from that. In America, Europe, Japan, and rest of APAC, you do have some growth right there. On the iPhone sales, roughly flat, up just fractionally on the Macintosh sales. Still strong growth there as the company continues to innovate on the chip side of that business and also keeping pricing relatively flat. iPad sales up nicely as you had a refresh cycle in the iPad, and wearables coming up short, $8 billion down to 7.5 as you continue to have watch impact as it relates to some patent disputes, and also just in general, that device being long in the tooth. The services business went from 23.9 billion up to 26.6 billion. I believe Wall Street estimates were closer to $26.7 billion. Now, we still got plenty of cash over on the balance sheet over at Apple. One thing that goes unnoticed on a lot of financial news sites is you have the cash and cash equivalents. That's up here. That's standing at $48 billion in the most recent quarter. I'm seeing inventories down considerably, despite the fact that there were rumors, or actually confirmed reports, that Apple put a bunch of iPhones on airplanes and then ship them over here into the United States. Now, those inventories could be carried over on the retail side of the inventory and not carried on Apple's, but I do see year over year inventories down. In an era of tariffs, that might not actually be a good thing, believe it or not. What goes unnoticed is the company also has these non-current assets, marketable securities. So this is also cash, but this is likely pledged against the long-term debt that they have sitting here at $78 billion. They have current term debt coming in at $13.7 billion. Nothing to be overly concerned about, but that is a lot of debt, particularly if you have more and more problems, or if you have to start reinvesting in the business as it relates to manufacturing, which could explain why the buyback, again, is not $110 billion, but just, I say just, $100 billion. When you come down to cash flow, for a 6-month period of time, it actually declined from $62 billion down to $53. Company doesn't have to invest a lot because they have third-party manufacturing and those types of things, but they did spend $6 billion on property, plant, and equipment in the quarter. And if you start building out stuff here in the United States or other countries and you're doing it yourself, well, that's a number that will continue to balloon. But they continue to buy back the stock over the past 6 months, $49 billion. They continue to pay back some debt, also take on some debt. They continue to pay dividends as well, and those grew by 4%. So all things being equal, still a very shareholder-friendly company. Now, from a technical perspective, we still are locked in this uptrend since the mid-2020 timeframe. So you've got a 5-year uptrend on this one. If you stretch this out to a longer-term time frame, I mean, you basically have been in an uptrend on this one since most of you were born. I divide my buying zones in half. When you're at the top of a channel, you are taking profits if you feel like it. At the very least, you are just holding pat on your position. When you come south of the middle of the channel, that creates buying opportunities. When you're at the bottom of the channel, that creates a lot of excitement, and that usually triggers an alert over at Equity Empire for premium subscribers. I am monitoring about 60 to 70 stocks. So when they reach the bottom of this channel, you get alerts, and you can imagine over the past month, as you had a dramatic drop in markets followed by a dramatic rebound, there were probably a fair amount of alerts during that time. Folks, that was Apple's Q2 results. Lots of headwinds, lots of negative headlines, probably keeping or bringing a buying opportunity as it relates to Apple, because company with this much cash and this much durability, they'll make its way through and create more shareholder wealth in the future. Folks, that was Apple's Q2. Thanks for watching. Good luck with your investments.